Okay, good morning, everybody, and welcome to the Gulf Intelligence Daily Energy Markets podcast, Monday, August 23rd. We're crawling out of the silly season, and with it, markets open in Asia this morning with oil prices and all assets taking a bounce after a rather turbulent downward move last week. Let's go to Sydney. Peter McGuire, CEO of XM Australia. Picking up on that point, Peter, is this a buying moment? Does this $65 oil and the correction we saw across all asset classes last week offer a kind of a get-in moment, or is this still got some downward motion, do you think?
Well, good morning, Sean. I sat at 62.17 for WTI only a couple of hours back, about 8 hours ago, and now it's the best part up, 2.5%. So it's had a nice day. Everything's in the green. Some big moves across Asian equities. And let's not forget, last Thursday is that largest fall in history for iron ore, down nearly 14% for the day. So it really shocked, it shocked the market tremendously, and it threw everything else down. So yeah, I think it's probably like anything, Sean, such a big move to the downside. It bounces from those lows, and you've had a nice uptick today. It's been a very strong move. So does that momentum last? Let's see. It's a big week. It's an electric week as far as data. The PMIs, as Matt mentioned, you've got Europe PMIs, you've got the British PMIs. They're all out in the next matter of hours. Don't take your eyes off Jackson Hole. What's the storyline as far as the COVID lockdowns and where we sit in Australia and all of those sort of points? But US equities are bouncing strongly to the upside. They've just continued their momentum, Sean. So really, if you've been an equity trader, the last 4 to 5 months has been fairly good results. Crude's a different animal, but it's certainly been incredible. As you mentioned, you forgot your shorts or you took the wrong shorts. At least you ended up in some shorts going to the beach, but we only hope. And our traders, I think, are rubbing their hands with glee, Sean, that it's been a tremendous month. And when you're seeing these big downdrafts really from the end of June, the last 7 weeks have been non-stop action. US dollar index, crude, have a look at gold, look at some of those base metals. If you didn't make a dollar, Sean, I think it's time to give it away.
We had a headline, Peter, out of China today saying that once again they've nailed this COVID outbreak from the last month. I'm not so sure about believing every data point that comes out of China, but ultimately the media seems to be giving them a general home run on once again slamming COVID back into the box. But there's clearly dynamics underway in China, regardless of COVID, the clampdown on different industries, releasing strategic reserves from oil, from iron ore, from other commodities, that COVID aside, China is in a particular moment that is all contributing to a weaker economic outlook.
Absolutely.
Sort of self-imposed in a way.
Yes, it is self-imposed. And as building on what Matt mentioned, only a couple of weeks ago, and the Gulf Intelligence was off over that period, but we've got to remember that it eased its banking as far as the retail sector, assisted that. So, flooding more liquidity to the market. We understand and they've been saying it for years now, as far as their property market is pretty well cooked. Maybe it's time for a little bit of a pullback, and they're trying to stimulate as hard as they can. The storyline as far as COVID, I'm just reading on Bloomberg, they've knocked it over in a month. Hard lockdowns, or draconian, I think was their terminology. If you believe the rhetoric, well, yeah, that's good. And the other side, of course, we've got to wait to see how they perform over the next matter of months. Their equity markets is doing okay. It's moving quite nicely, but just let's see how it goes as far as PMIs. Is it going to have, we saw those Japanese numbers, is it going to, run across and be more of a contagion across Asia, that softer growth over the next couple of months? It was only this time last week, Sean, that we were saying that New Zealand was an 80% chance that it was going to raise rates, and a 20% chance of actually having a double hit. So it would have been a 0.5% rise. That didn't materialize. So that just demonstrates the fragility out there across all markets, and how China positions itself. yeah, I've just got to wait and see
Well,
from a
the Asian
geopolitical
demand.
stance as well.
The
Sorry.
Asian demand story seems to be, I mean, clearly, whatever you take in the US, marginally, the driving season not as great as expected, whatever, still everything
Sure.
moving full throttle pretty much there, and Europe coming back. But Asia, being the largest growth and demand for OPEC plus countries, typically is the sort of sick child in a way. And I'm wondering, from your perspective, how great is the appetite in Asia, Australia in particular, the center of it, for more lockdowns? The general narrative in the US and Europe is, regardless of infections, there's just zero appetite for the lockdown option. Clearly, that remains the main tool in Asia. Any resistance to that?
Well, yeah, I can only say after, I think we're in week 7 or might be even nearly week 8 of Sydney being in lockdown. So it's a 5K radius. I think that people are pretty well over it. I think there's some doubt there as far as numbers, and the general consensus is it's such economic carnage for small business and small enterprise, Sean, that do people actually bounce back? That's a major issue. So I think that's the word on the street in Australia, and they're more focused on what's happening domestically here than what's happening to the north. I don't think anyone really in Australia is too worried too much about what the situation is in China. They're worried about what's happening here economically and psychologically. We've got a service called Lifeline, which has been in operation for 58 years, and it's a service to help depressed people, suicidal thoughts, and so on. They had their largest day ever as far as fielding calls from the man and woman on the street, and that just demonstrates the fragility and the psychological turmoil that many families are living through at this time.
Peter, you mentioned earlier the big sort of outlook this week is the Jackson Hole meeting of the world central bankers, now virtual, not happening in physical in Wyoming, but virtually. But nonetheless, my question to you is, I would expect that all of their speeches would have been written last week, all of their little beaver bees been typing away most of August, give them their speeches. Do you think they're back at the computer, busy editing those speeches, given what's happened in the last week? Or is that trend that what's led into here locked in? What's your sense of the flexibility, the change to where the Fed thinking is? Because a week ago, it was clearly we're all thinking about tapering.
Absolutely, Sean. And I think they're still beavering away on their typewriters, because it was nearly a done deal. As far as the market was concerned, it was done with New Zealand. And I think the rhetoric would have been built on that, okay, well, we'll start to taper, and yeah, we've got to contain inflation, and everything's, we're back to a more rational cycle. And I think that it's been derailed a little bit, Sean, in the last couple of days. I think the China story, I think that big washout Thursday, I think the overall weakness from globally, and the lockdowns, and what's happening as far as COVID in so many different parts and in America. And I think that's the issue. That's what's scaring, I think, all of those central bankers. And I'm not expecting a great deal. This time last week, I was thinking, okay, it's going to be game on. US dollar will probably rally a little bit further, and it's all blue skies. But I don't necessarily think that now, with 72 hours till its launch date.
But something as fundamental as shifting central bank policy from accommodative to slightly restrictive. I mean, slightly, ever so slightly. Talking, really. We're not even mentioning rates here. We're simply talking about going from $120 billion of asset purchases a month, maybe to 100, right? I mean, this is on the real margins of tightening. So my question ultimately is, would something that fundamental not be sort of locked in, that a week or two of uncertain sort of change in the wind isn't going to alter that trend line? Or is it that fragile? Your thoughts?
I think it's that fragile, Sean. I really do. I think it's a week-to-week proposition, and I think that traders and certainly central bankers are mindful. They really, it's like dancing in a little bit of quicksand. They're not sure where how solid their feet are going to be, and at the moment, it's still it's a precarious situation. And again, building on that New Zealand theme, so that was going to be first cab off the rank. That was really a change, I think, in policy, in mindset, and that's really, I think, been derailed. So I'm looking forward to hearing what Jerome Powell has to say. I'm not expecting any surprises, and I think that it'll just be very much the status quo. We'll talk about it next month. Inflation's, they say, is under control, but I don't think that's necessarily the case, and we've just got to see how we are in another month.
Looking out, Peter, as to where the other issues go this week, you mentioned the PMIs. Clearly, Monday morning, the markets opened with a pop, a little optimism in the air. Sentiment might be shifting. Dead cat bounce, says the chat room. Your thoughts?
Dead cat bounce. I think it was oversold, Sean. I think that there's just a bit of a boom time. Traders have been able to enjoy a very, very strong Monday. Europe, Asia, Taiwan bid strongly up, South Korea, China. Overall, a general very positive theme built on Friday evening from their equities in the US. As far as crude was concerned and commodities, well, you know, energy and some of those base metals, they were oversold. They were spanked down Thursday, a little bit of a bounce Friday, and then they've just recovered.
Should we read much into the Chinese? Should we read much into the Chinese news of sort of getting, obviously, this wave of COVID? I mean, not to speak too soon, but it does appear, according to reports, that they have locked it in. Is that a big factor for the sentiment in the markets, given what happened in the last month while China was dealing with a sort of fairly minor COVID outbreak from global terms, but nonetheless, the Chinese react quite forcefully to that, locking in certain ports, backlog on shipping and so forth?
Yeah, well, that could be the case, Sean. I mean, you know, you've got to add that to the ingredients of the cake of why it has bounced. So yes, I'll give that, you know, 30% for today, and that's been demonstrated across other Asian equities. And just the overall, it was sold down, spanked down hard, and it's bounced. And I think it is that dead cat bounce. I think it'll move on to. Might go up another $1 or two, but I think this week it's going to be fairly flat.
So that's it. That's a wrap. We're thinking of Laurie this morning in darkness in Lebanon. Matt Stanley, thank you for your thoughts this Monday morning. Peter McGuire from Sydney. The market's open in Asia with a nice pop. Let's see if it sustains through the week. We'll be back tomorrow, 10:30 every morning UAE time. All the best. Have a good day.
Thank you, Sean. See you, Matt.
Cheers.